We'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, happy Tuesday. Welcome back. I think I've got to close out a trade here on Tesla this morning. This was coming up during closing bell yesterday. Let me have a sneak peek. I had some 111 trades on Tesla. I'm waiting for an SPX trade to close out this morning. I'm up about 14%. I've adjusted my take profit to a, what would that be if I did 215? It'd be $40. So I adjusted it to about a 15.6% profit. So I'm close to getting that thing hit. Let's go to this account. So close to SPX, got it filled. So let me update this one really quickly. Quick update. Entry for 255 credit. Closed for, so that trade. There we go. So 215 trading for $2. Yep, profit target hit. Okay, so taking the winner, price getting back towards my center prices, which is good. So sold some calls, sold some puts, price cooperating nicely, taking the win. Let's have a look here. At a Tesla trade. Right now, take a look at markets. We are still kind of hanging out around, if I go to the higher time frame. So earnings on Wednesday, Thursday, Mag 7. This is past support. You know, this is a very choppy zone right now. I wouldn't be terribly surprised. I think, you know, getting through this week's price action, I could see prices being very indecisive and maybe waiting for a bit more clarity to get through this week. If Mag 7 earnings are solid, I could see prices, you know, melting up a little bit higher into some of those pullback levels. You know, here is a 61% zone from the high to low swing. That would be your 21% peak to trough. If we come back to kind of that golden ratio, that gets us to like 5640. We come back into previous highs around 5700, 5750. I think Mag 7 is going to have to be pretty solid on Wednesday, Thursday for that to also push the markets up. I did see some news today that was interesting, like General Motors is not doing buybacks. I think now that the buyback window is open, I'd be shocked to see companies not doing buybacks. But you never know if that's going to be this interesting tone. It's like, we don't know what the future holds. We're not going to do buybacks. We're, you know, going to hoard cash, or who knows. Then that could obviously be a little concerning, because that's kind of what keeps the stock market propped up. It's you have, you know, general flows, interest rates, monetary policy, fiscal policy, buybacks and company participation, as well as you know, earnings and forward guidance. Interest rates are a big part of that. That's monetary policy. But this week, I mean, Mag 7 earnings on Wednesday, Thursday. Is it enough to push the market into a melt up mode? Is it enough to turn the market's corner where it's like, yep, this is resistance because it was past support. Now it's acting as resistance, right? Like literally, you know, today and tomorrow, or I should say yesterday and today, this little range trade, we might just want to keep a close eye on this. If price breaks, there could be some flows. If price breaks, there could be some flows. There's a gap to fill here. There's a gap to fill here, right? I mean, I mean, again, I'm talking like very granular short-term price action. But if we get a break to the upside, yeah, we can go to 5650 or 5700. We get a break to the downside, we can drop to 53, 5300, 5350. So we'll just keep an eye on, you know, how price actually behaves this week. It could be very choppy. It could be back and forth, but don't be terribly surprised if we start to see anywhere between like 1 to 5% swings in a, you know, in a week. So the market is still like lots of indecision. This pullback and this kind of offer of de-risking and deleveraging is, I think it's fair. But having this market, you know, offer up that type of push, that type of symmetry, I think that's a great spot to be de-risking if we do go a little bit higher. I would imagine that Mag 7 this week is going to be pretty steady earnings, because this shouldn't be reflecting tariffs. Okay, earnings right now, it's like the forward guidance would be talking about the uncertainty of tariffs, but the actual report, earnings report, shouldn't be reflecting any major tariff impact. That will be next quarter. So anyway, for the day, things still pretty choppy. We'll take a look at the heat map. I want to look at, I can close out that trade. So we're about 50-50 now. We got 46.4% of stocks advancing, 46% declining. I've got MicroStrategy hitting a new chart alarm. Want to check on Tesla really quickly to see, should be a couple of trades I can close out. It was a 205 by 200 by 195. I put in that trade for 284. Yesterday it was showing a debit of 85 cents, so I can take about 200 bucks off the table. Also lower the risk quite a bit. So let me see what that looks like on Tesla. Let's see here. Snap has earnings this week. I saw a big gap in HIMS. HIMS is up to like 30, $35, $36 this morning. Right now it is at 34.81. So we gapped up to like 37. We faded a little bit. I'm up about 2,600 bucks right now in HIMS. So I've got a ratio spread looking pretty good. That's up about $170. I've got a diagonal spread that maxes out around 30, 37 on the call side. So that could get called away for about 40 bucks, or no, $4 per share. And I've got quite a few of those. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 9 of them. So if I've got $400, that's another like 3,600 bucks. So we'll see. Tesla trading at 281. I should have a 111 in here that I'm interested in letting go of. So this is out to May 16th. This one's up around $200. So this is the one I was considering closing. What's the debit for right now? This should be trading for hopefully less than 85 cents. I mean, I still think it's wise to take the profit. This is out 17 days. 195. Let me look at the strike here for the May 16th. We're trading at like a, I mean, it's like the odds of this thing getting hit or assigned is pretty darn slim. I think I'm going to hang in there for this week. I'm going to let this go for a little bit longer. I might even roll a call out another week. So these covered calls at 250, 750, I might just roll them one more time. I'm up about, I don't know, 1, 2, 3, 4, probably $2,500 on covered calls right now. This 111 trade sitting up around $200 is 800 bucks. If I go a little bit longer, you know, the good thing is it's a low delta. Like, I know Tesla is volatile. This could obviously change pretty quickly. I guess the question is, if I wanted to close this trade down, because this is a much higher strike. If I close this trade, I don't really want to close it for a loss. And I've got a bunch of credit spreads. Naked put, I'm going to hang on to that one a little bit longer as well. So let me just talk out loud here for a second. So 195, if I close this down for $200 profit, if I close out these 245, 111, same expiration, this one still looks okay, but a 245 is obviously a little bit higher delta. That's trading at about a 18 delta. So, one standard deviation move, probability wise, I shouldn't get assigned at a 245. I shouldn't get assigned at a 245. I don't really want to hold this trade all the way to expiration, but the goal is if I can survive this week and price can stay somewhat stable around this like 280, 290 handle, maybe even, I mean, if we get Mag 7 to lift the animal spirits up a little bit, maybe the 290 to 300, all those trades start to look better for profit and get closer to expiration. So I think I'll sit on this trade for maybe this week, and we'll just see if Tesla stays somewhat buoyant and resilient. So Tesla is at 281. You know, like I talked about this yesterday, I'm concerned that we have a bit of a resistance here. And if Tesla drops back down, you know, obviously we have lows around 220, highs around 290, and somewhere in between, it's like prices are going to settle as they settle. But we had a high around 293. I just want to see if we stay somewhat elevated on Tesla. We shall see. But let's go top down currency strength chart in the day. Right here, we're seeing the dollar on top. We're seeing the Swiss making its way back up. The yen was also getting a little bit stronger from weaker position. Big drop in the Aussie New Zealand this morning. So big drop Aussie New Zealand. Looks like we have some risk off trading going into this opening bell. So around 9 a.m., JPY gets stronger. Around 6 a.m., this is all Eastern time. 6 a.m., the Swiss starts to get a little bit stronger. Dollar was already on top. Not a ton of volatility on the vertical axis, but let's have a look at everything top down. So S&P on the morning is slightly negative. Pretty choppy overall. This is yesterday's entire day. So yesterday's entire day was essentially a zero gain. I think the markets actually finished slightly positive on the morning, but today is relatively calm. So that's that. I mean, again, fine. And we're hanging out at this level. I'm going to go ahead and so this is a sell trade from this morning. So I'm going to move this. I'm just going to set it at yesterday's low, and I'll set it here at today's high. It's like, yeah, as we get into like Wednesday, Thursday, short-term price action is if we break higher, we probably have room to drift higher. We break lower, we have room to drift lower. So it's not crazy difficult to see this level is a gap, okay? And this level is a gap. So if we have gap fills, let me use a slightly different color here. Let's go gap fill and gap fill. So if we end up breaking higher, a gap fill around 56.70, we end up breaking lower, gap fill around 52.88. That potential swing percentage wise, if we break above the high, we're looking at about a 2% move to the upside and possibly some room to run. But I mean, 2% feels pretty solid. And if we break to the downside, I mean, I would expect the market to move a little bit faster, and filling that gap would be about 3.25%, 3.24. So potentially a 2% breakout above yesterday's highs, potentially a 3.25% breakout if closing below these recent lows and trying to fill a gap. All right. So there's some chop and some indecision. Let's take a look from the bigger picture. I asked this question yesterday. How many of us think that we're going to retest lows versus retest highs? My personal opinion is that we're probably closer to a gap fill here or retesting some type of higher low. We'd have some major concerns if we retest the lows. So, what would be the major concern? Well, this trade talk in this 90-day window, things get worse, things escalate. Maybe China continues to not play ball. It's like there's a lot of leverage going on here. I listened to an insurance podcast that I'm going to have to re-listen to because it was kind of late last night. But basically, it was the guy that wrote the milkshake theory, and just talking about the position of China versus U.S. right now, and a lot of, I mean, there's a lot of power. It's just a straight up power play, and it's really abrasive. It's really aggressive, and I don't know if it works. I mean, it's like the silver lining and the hope and optimism that it does improve the global positioning for the U.S. Um, but I also think that it's a big power play from number one, number two to just take some bigger stabs at each other, and I think that's where things get a little messy because it's a very disrupt when you have world number power one, world number power two, essentially, head on collision if nobody budges and flinches. I mean, look, we know Trump flinched with a 90-day pause, but that's essentially like the world is in that negotiation, right? China versus US is still the main focus. And until that is resolved, this is where the market's still going to be uncertain. So I'm not getting super bullish even if we break this trend line. I'm not getting super bullish. I think this runs right into some key resistance levels. Um, but gap fill here, running into a trend line break. We could have some levels retested around like 53 or 5200. So I just want to keep a close eye on all that stuff. Right, I'm still hedged. If we do retest lows, those hedges pay out very well. If we don't, we drift up higher. Then I'm just going to be de-risking, deleveraging, and adding some more cash to the portfolio to be ready for a different positioning. But for right now, I'd say watching to see do we get a breakout up, breakout down, and I think right now it's like patient on futures, patient on price action, not really getting super directional. So should be okay. All right, Qs. Let's go NDX. So we are on the right-hand side of the trend line. With Mag 7 this week, there is room for the Qs and the Nasdaq to get up into this 200 moving average. We still have our death cross. We still have some concerns. If this goes up into symmetry, this would look like a pretty nice bullish pattern. I still think there's a pullback. Even at best, a higher low is going to have to form. So maybe there's a long opportunity in here with a pullback. I don't think the market just goes up and up and up and up and up. I don't think that happens. If it does happen, I honestly will be shorting the market because I think at best, what hasn't been priced in is the fact that our price to earnings on the S&P is still very high, and I think that earnings compression. I mean, I don't know how Fortune 500 companies can have this super optimistic outlook going into this year. Like right now, with the reality of everything you got on the table, you have some of the biggest companies in the world with a tremendous amount of uncertainty. So I don't know how earnings necessarily can be so good, right? The consumer is, I'd say, stretched pretty darn thin. I mean, this is like the soft data that has yet to become priced into the market. So that's my big downside concern is that if we're going to retest lows, it's the reality check that this market is just not able to sustain these all-time highs. And how does it play out? Well, I mean, if we melt up higher and everyone's like, oh my God, look, no recession, and then everyone starts to get bullish again, that's a perfect time to be a contrarian, I think. It's almost easy if it starts to fall here. If the market starts to fall here, then it makes a lot of sense. You've got your bear market, your bear market impulsive move. You got a bull market rally, and then you'd have the bears taking another swing. Whether it's a higher low or it's a retest of the lows, I think the bears take another swing. Okay. But when everyone would get super excited, all of a sudden you'd see the sentiment reports going, way less bearish, and they start to maybe even show optimism. I just think that's a perfect time to short it. I mean, and it'd be a hedge. It'd be a cheap and expensive hedge, but I think it could pay really well. So we'll see. It's all noise right now, and there's a lot more clarity hopefully when we roll into July. Um, I think by the time the Fed starts cutting in June, let me take a look here at the bond market. This is going to be important to watch. TLT is making yet another high, which means that the U.S. 10-year is also dropping to some fresh lows. So we're down at current levels. We're down another. I'm just going to send a text out. We're down another 0.47%. And basis points wise, not a ton, but another 0.02 basis points. I mean, I'm paying attention like every 10th I'm paying attention to because I'm trying to get my mortgage. If I can see a mortgage on the house that I'm closing on end of May, I'm trying to get that as low as possible. And so I'd like to see it just kind of settle back in. So something around here maybe gets me into like a 6.5 lock or something like that, which is okay. It's not great. I mean, I sold the house at 2.72%. By God, I wish I had that interest rate, but it is what it is. All right. Anyway, let's keep going. So Nasdaq, some room to drift higher. Where to? There's a 200 moving average right in here. We still have some gaps in this area to fill. If Mag 7 is able to take us higher. Mag 7 this week, Wednesday, Thursday earnings. I will be pricing out some earning trades this week. Let me have a look at this. So this morning we hit with SoFi, PayPal, UPS, JetBlue, Coca-Cola, Pfizer, Royal Caribbean, Spotify. Take a quick peek at those. That was before market. So SoFi is up, but falling back. So we hit top and bottom on SoFi. That's not bad. Okay. PayPal, missed in revenue. BDPS up a little bit today, not much, by about 1%. Let me zoom out on PayPal. PayPal fundamentally is not awful. I took a ride on PayPal from this recent swing. I was scooping up some PayPal around the $65 handle. 65 to 90 was a pretty good run. I took some profit on that one. This was a couple of. This was a debit spread. This was a credit spread. Just did some income trading on that swing. I also did a diagonal spread where I bought a deep in the money, like a $50 call, and I sold like a 80 to 85. I think I paid like $10 for that. Grabbed a nice little rewards risk that was greater. Now we kind of reset, but fundamentally, I think PayPal looks pretty good. Again, it's a question of the consumer though. Along with, I mean, it's a bit of a crypto play, but mostly consumer play. Come on. Hello. There we go. All right. So price to earnings, relatively cheap, 15.3 times the earnings. Fair value is almost double, not bad. Compared to peers, not bad. I do wonder what the overall risk is. I mean, fair PE is 19 times earnings, so I mean, there's room to appreciate. That should bring price higher. From a position standpoint, I mean, PayPal shouldn't be terribly expensive. If I got involved with a diagonal spread, let me see what that would cost me. So I'd go deep in the money. I'm curious, like How far out do I want to go? I guess if we're just going to have a drop in, if we're going to have another flush down in markets, I don't want to get super aggressive on anything bullish right now. But let me see. If I went out to January, I buy a deep in the money call. I could look at like a zebra trade, which means I can only risk what I'm paying for the debit. So if I buy, that puts my break even around 79. If I sell, I'd have to put 2 of those in, so it'll go times 2. And then I sell in at the money. So for $10, $10, I mean, that gives me a break even around $60. So I've got some built-in intrinsic value, which is good. And if price goes higher from here, it's running as, oh, I can take that back. It's gonna be more expensive. That's there you go. So it cost me $3,000. My bad. I was way off. I need to go 2 to 1 if I'm going to do a zebra trade. So that's buying 2 calls in the money, selling 1 at the money. It acts like a synthetic long, but also the nice thing about the zebra trade is it doesn't have unlimited max risk. Like if the stock went to 0, a synthetic trade, which is I were to buy a call and sell a put at the same strike, that's unlimited profit potential, but I also have risk all the way to 0. So if I create a trade like this, where it's more of a synthetic play, now I can buy 2 calls at the 50, sell 1 at the money. And that'd be sell 1 at the money. Cost me $2,900, but that's my max risk versus a $6,700 risk. That's the most I can lose. Buying power, it only takes up, $1,100. How low does PayPal get? I don't know. I mean, we did miss a little bit in revenue. We hit EPS, which is fine. I'll get rid of this because that trade's not valid any longer. But do we have room for this thing to run? Yes, no, maybe. I mean, fundamentally, it's like 19 times earnings. I take this out. Maybe the smart trade is to go out a little bit longer term. But if we see, I mean, even through the downturn this year, PayPal just dropped from 93 back down to support. It's like if we stabilize in here, I could see a range trade maybe. I'm taking a 1% risk to get up to highs. It's not a bad trade. So if we go up, let's say, $20, it's a, kind of a 1-to-1. I guess what I don't want to see is this. If we go sideways, then I run out of time. So it's like, how much do I like PayPal? Do I want to just buy the stock versus trying to trade an option? Probably. If I have a put, I can protect the downside. So let me debate on that. I don't mind the zebra trade, but I've got to be a little bit more bullish overall. And right now I'm kind of not. So if I just buy the stock, I'd put in a collar trade. I'll write that down. PayPal. Watching that one. All right. Next up for earnings, just going through the list. UPS had earnings this morning. I talked about UPS being a potential buy. They did beat top and bottom estimates this morning, which is fine. We're back down to 2020 COVID levels pretty much. Let me check on UPS fair market value. I mean, Snowflake wise looks pretty good. Dividend, I can't believe that UPS has a 6.72% dividend. I know they have some pension liabilities. That's why UPS and FedEx have been performing very differently. But I mean, price to earnings relatively cheap. Fair market value, discounted cash flow looks good. I mean, FedEx is actually cheaper, but price has been very different. Look at the difference between FedEx price action wise versus UPS. So COVID lows down here at 95. We're trading at 209. You look at UPS, this thing has been like a dumpster fire since the highs at 234, and that was just after the COVID melt up. So that was essentially that, tech market turned in November 2021, S&P turned in January 2022, right around that top in the S&P, UPS started to fall. We're coming back into COVID levels. Like, again, not a bad trade. But I would want to have some downside protection. What's the IV on UPS? I'm curious if I can get IV rank is so low. I probably won't even get the trade that I want. If I went out 52 days, yeah, these ratio spreads are garbage. unless I'm like, well, I will, buy that, sell this times two. Yeah, that credit is so bad. Hmm. All right. I mean, it's at a good level. I just don't know. I can't really trade options on it when the premiums are crap. But I'm going to write it down as maybe a dollar cost average. We'll see. It's hard for me to like anything right now. Okay, JetBlue, please God go up. 398. JetBlue on the daily time frame earnings this morning. I thought they had earnings this morning. I'm seeing on my chart they have earnings this morning. There it is. JetBlue missing revenue. It's the little airline that just can't catch a break. They couldn't get that merger with Spirit to go through. That was a fail many times. So I mean, I have shares of JetBlue. I would like to dump it at $8. I'll still make. I'm break even like $5. So I'm just trying to get rid of my shares at a win. But still not catching any traction yet. Coca-Cola. Coca-Cola is at 72. Earnings today beat top and bottom. This is a good defensive play. This is a good dividend play. Not a crazy high dividend, 2.84%, but very defensive. If we're lucky on Coca-Cola, I'd love to see price fall back down to like $60. I would definitely scoop up some Coca-Cola. Right now, I already have some shares. They're covered at 67.50, and I could roll it. It's not going to make me a ton of money if I roll it, but it's better than nothing. It's like at least it's an income trade to kind of prolong and extend the profit potential. Overall, I think I have like, I don't know, maybe 500 to 1,000 shares of Coca-Cola. Let me check. Coca-Cola. MO's up to some fresh highs. Coca-Cola is at 72. 1, 2, 3, 4, 5, 600 shares. So up around $1,700. MO up around $23,000. Like these are dividend plays that are pretty safe, pretty defensive. You don't get a lot of premium on rolling calls, but at least it keeps the trade alive. Royal Caribbean, Pfizer. Hey, Pfizer. Looking a little bit better. Missed in revenue, but shares are up. I'm happy to see prices are up. I'm still down overall on my positioning on Pfizer. I went in a little bit deep on that $25, $26 support. So let me see where I'm at. Pfizer is down about 18K. I don't need Pfizer to do anything magical, but I would love to see it get up to like $28 to $29. I mean, the fair value in this one is kind of ridiculous. It's going to be a long ways out, but I mean, Snowflake's decent. Price to earnings is really low, 16.3 times earnings. $70, I'd freaking love $70, but I'd be happy at 32. 30 works. Previous levels at $30. Break this high. Let's see something. If we form a bottom, get up to these levels, chop around like one little push into this $29, $30 handle. I'm out of Pfizer, and I'll take a nice little winner there. Okay, Royal Caribbean, kind of the state of the consumer here. RCL. Missing revenue. I'd like to see this one pull back a little bit. I'd like to see it pull back a lot of bit, actually. We did break below the 200 moving average. So if it's possible to get between the 200 and maybe this yearly average, maybe just a little bit more like retest the lows and see. I mean, and here's the question. If we go into a recession and everyone's talking about recession, we're in a recession, it's official, then stocks like this, which are discretionary, are probably going to take a hit. MGM, LVS, RCL, Airbnb, hotel groups, like they might take a hit if people are all of a sudden realizing like, oh, the recession, I need to stop spending money. Consumer pullbacks is not a good thing. Like this is a service. This would be instead of paying for goods, you pay for services. RCL has been a crazy run since COVID. I mean, I bought this thing during COVID, made a nice little return, bought it near the double bottom, and I just exited there. So I mean, I've had some good trades on it, but I didn't expect this stock to go from $40 to $250. That's pretty wild, but it did what it did. Spotify. How much does Joe Rogan cost Spotify? That was a trade from last earnings. We've still been in a big range. We did gap lower on Spotify, earnings and revenue down. What was that gap? So for the week, I mean, Spotify's down $67 on the week. That's a pretty big jump. So about 7% on the day. Interesting. I didn't trade the earnings. Still kind of in a range trade. I wonder post earnings if it is, sell above, sell below. Let me see what an iron condor looks like on Spotify. Can I get above 667 and get below 445? Maybe I can craft a little iron condor here. Spotify. Ivy rank is still pretty low. This also may not be a good looking trade. But if I went out about 50 days, Spotify. Okay, so the Ivy rank is still pretty low. 667. So collecting about $1.20 on that. That's not super awesome. But let me see what the 450 looks like. 450. So I'm not even getting a third of the width. I don't love that trade. Post earnings, if I did a little bit higher delta, like a 20 delta, put side, what's the premium difference? So about $9 on the call side. I mean, that's a little bit better. I have to go slightly higher delta. Expect to move of about 70 points. This is post earnings. Let me see here. Question on Spotify is, are we going to stay, post earnings? Is there a bit of a nothing burger as far as movement? Are we moving back up? Are we flushing lower? As long as we don't really break these levels, I mean, this kind of stays decent. Risk reward, it's not awful. I'm risking $600 to make 373. I'd probably take less profit on this trade. Meaning if I max out at 370, I'm probably happy taking, half that profit. So I make $180 on the trade. It's not a terrible trade. So let me see something here. Let me look at like a broken wing butterfly. If I did a butterfly call, let's go up in strike prices here. So we've got highs at 6. I'll kind of pin it there. So $1 credit on a butterfly. Okay, that's not bad. This is out 52 days. So we'd have to hit all-time highs. There's a profit trap. We had highs at 667. If I pin that right there, that's 60 cents on the broken wing with a potential $1,000 profit trap. Like, that's not a bad trade. I'm gonna take this trade. I'm gonna give it a profit trap. 52 days out. 30. Oh, that's way different. 30 cents. Try this guy. 50, 70, and okay, that's a little bit better. All right, let me see if I can get mid price is 70 cents. I'd obviously like a little bit higher profit. Let me see if I can get, I'll try 75 cents credit on this trade. So not feeling it. And this might be like no liquidity. I might not get the trade that I want. I'm going to try to narrow it down. This is showing a debit for some reason instead of a credit, even though it's a broken wing butterfly. Just going to cancel that. Let's try that one more time. So go up to my 600 side. So that's 20 wide, 30 wide. All right, now that's a bit more risk. I don't love this as much. Try this here, 70, 30 wide. Like, this isn't terrible. I hope I can get filled with this trade. Let me see if I can get filled for $1.60. $1.60 not filling. $1.55 perhaps. $1.50 kind of final offer. Son of a biscuit. So the plan was to do this. I was considering a broken wing butterfly up here, which would be on the call side. So this is live price. I have my credit, my trap, and my risk on the call side. So this would be a price goes higher. So if price moves up, so this would be positive price action. And then down here would be negative price action. I was looking to see if I could build the same trade on the put side like that. So this is real price in the middle. If I can grab $1, $1.50 or so on the upside and $1.50 or so on the downside. And realistically, it's like I want price just to stay in the middle. And I make $3, but I have a profit trap. If price were to test the high, test the low, I can get a profit trap. That's the plan. So let me see if I can actually get that trade. So Spotify. If I can't get filled on it right now, like I'll just do it offline. But if I find the trade, I'll throw it in Pulver Alerts if I like it. So I'm going to try to get something here like at the highs, highs around 650. Yeah, 650 highs. So 652 and recent lows around 475. All right, so I'll mess around with that one. Okay, let's keep going. That's kind of it. Ultra had earnings this morning. I mean, my gosh, man, this stock is impressively volatile for a stock that usually is boring. We're up around 4% today on MO. So is it worth it? And I have some shares of it. I might end up just doing another roll for some more income. So here I have some shares. I'm covered. Let me do another roll here. So I'm going to take this June 20th and roll. If I roll it out by, gosh, it's just so terrible. I'm going to try to roll this out for another $1. That's another $1,000 of profit for not really having to do anything. If I roll it up, I'm going to pay a debit there, but that increases me to $1.80. That's another $1,800 of profit. I think I'm just going to keep this. I'll keep the 98 cents credit, and that gets me closer to like a high probability we just stay where we are. So I'm going to try to roll this out. It should be liquid enough to roll this for like 90, maybe 90 to 95 cents. See if I can get filled for 95. 95 cents. See if this will work. 9072. Yep. Okay, let's see if I can roll this. 95 not showing, 90 cents. I know the bid price is 70. I mean, I might have to go all the way down to 70, but I'll roll this down. 85 cents. All right, fills for roll 85 cents. So this one will be the same thing. Quick roll out, keep the strike the same. See if I get filled for 90 cents in this one. I'll penny this one down. 88. I guess it's only going to take me at 85. All right, fill to 85 cents in those rolls. So that is another 85 cents. So 85 cents times. So another $1,530 on the income side, just rolling a call. That's fine. Pretty defensive play as well. I mean, any dips and pullbacks, I don't mind establishing some fresh positions here. I took a lot of profit last year from the 40 to $57 run. Like I took some profit there. I was in for like probably 10,000 shares. That actually made me quite a bit of money last year. So anyway, all right, let's keep going. That's all for today. Visa aftermarket has earnings. It's going to review some earnings today. Visa at 339. AXP trading around 265. Let me do a quick peek on this one. I do have a May expiration on AXP. AXP is showing some profit. So we don't have earnings on AXP. I think they already printed earnings. So they beat top and bottom. Getting into next week's expiration, the question is, are we going to stay above 260? I think we can. I'm up about 65% of profit. I don't really want the assignment on this stock. I think I'm just better off going to take the profit. So that is grabbing a 65% winner. AXP Got into it for about $1.82. Looks like I can close it down for about 60 cents or so. That's a big one to eliminate some risk and get some buying power back. So close this down for, see if I can get out of here for 75 cents. Be generous. Frick yeah. That's pretty good. All right, that's not bad. Not bad. $1.82 close out for 75 cents. I'll take the win. Let me see if I can get this for 70 cents. Well, that's ridiculous. These fills are getting so much better. I might as well try for a lower fill then. Try for 65 cents. Oh my God. That's ridiculous. Well, unfortunately, I had a client that just got $10 better, or 10 cents better fill. But 75, 70, and 65 cents. So minimum profit was a dollar, what? $1.07 down to 65 cents, which was $1.17. So anyway, taking the winner, and the nice thing is I just added another like $8,000 or $9,000 in cash. So that one's one less thing to worry about. So the question here's what I was debating on, like if, and it doesn't matter now, but if I was sitting on this trade, if we're trading at 265 next week, this trade is worth $500 and the profit trap. So $500 and my credit. So I mean, potentially it could have been a $600 trade times 3. But the issue is if price were to drop less than 260, I would have to take the assignment and flip this thing, and that would be, break even would be around 247, and that's a lot of cash, even for excuse me, a portfolio margin account. 247 times 300 divided by 3. I mean, I'd still be tying up about 25 grand in buying power to flip this thing for, maybe a couple $100. So just not going to take the risk. I just closed out for, quick $300, no assignment risk, got some cash back. I'm okay with that. Reason I just brought that up is because Visa has earnings, so I'm curious, like the state of the consumer. If Visa comes in good, then AXP probably goes up. If Visa comes in poor, this is very easily a dump, right? I mean, and I'm just curious for my own sake, like by Friday or by next week, if we're at this 200 moving average and price goes lower, if I'm less than 260, then I know there's that potential assignment that right now I just avoided it. So I'm okay avoiding it. That's less of a headache. So anyway, that's aftermarket today for Visa. Starbucks. I don't know, man. Who likes Starbucks? I've kind of sworn off buying coffee at places. This isn't also a big test of the consumer. It's like, I know Starbucks is laying off workers. Price to earnings, a little bit pricey. I think at some point there's going to be a consumer consciousness, which is like, do you have to spend $7 every morning because you're addicted to coffee, or you want to learn how to buy a freaking coffee machine and make it at home? I don't know, but price wise, I mean, the big rip, even with like the CEO that came in and the big overhaul that was happening, I mean, the price is giving it all back. So we have a multi-year range now on Starbucks. But I would look at it this way: if we came back down to COVID lows, sure, I'll buy some Starbucks. $50, I'll buy it. But right now at 84, I don't know. If the consumer gets hit a little bit harder, I think we decrease. I'd be looking at 2020 lows. That'd be quite the discount. So I'll wait. Anything else? Snapchat today. Snap is trading at 896. Earnings are after market. I do have some trades running on Snap. I have a synthetic trade where I bought a put and I bought a call, sold a put synthetic at $8, and I'm looking to see if this runs up into 10. I also have a covered call. Break even's 963 is covered at 10. So if we get a rip today, hopefully this thing can make its way back up into the 10, 11, $12 zone. Synthetically, if it gets up to 12 or 13, I'll take the profit as well. But look at this range trade. I'd love to see it hold these levels around $8 and potentially get back up into $13 to $16 profit. So we'll keep an eye on Snap for today. Anything else? First Solar, that is FSLR. I took profit on this one. I'm pretty sure this one I don't have any longer. Yep, so I took profit on that one. That trade's done. Fundamentally, I mean, peak to trough, we're down quite a bit. The stock is down 62%. I mean, Snowflake analysis looks really, really good. Price to earnings, pretty cheap. Fair value discounted cash flow looks really attractive. I mean, I don't know what the peers are. It's like microchip technology, Sky. It's like, are we a semiconductor? What's First Solar? Semiconductors. So it says strong buy, which I think is interesting. That's your analyst rating. Technicals say neutral because we've been beat up by 62%. I mean, is this all it is? Is this better than Is this solar power? Or is this semiconductors? I mean, if it's solar, then I don't care about this thing until it drops to like $70. If it's semiconductors and we've been beat up by 62%, I treat this like a micron, and hopefully, this looks a little bit better. But I think there's some risk here. You probably have a higher beta stock. Not terrible. So 0.5 beta. All right, I'm gonna put this one on the list. Let me do some more digging on this one. Anything else for today's earnings after market? No. Okay, so we'll revisit some earnings tomorrow. Let's get into some currencies. Again, index wise today, things are still relatively calm. Fine by that. Let's take a look at dollar index. Let's do oil, gold, silver. Dollar at 99.16. Be careful on selling the dollar right now. I don't think this is a spot to sell. I'd say also we have a symmetry point right here. If the dollar just works a little bit lower, maybe a nice clean break, get a squeeze back to 101 or 102, and then you can revisit a confirmation sell up here. This trend line is good resistance. So if it stays there, offers resistance, I like that sell trade to resume the dollar. But right now it's like if you had anything running against the dollar, it's a great spot to be taking some profit. There's a lot of noise right here. We are oversold. I think a lot of conditions like, Aussie dollar reached to overbought conditions, euro dollar overbought conditions, pound dollar overbought conditions. I'm not saying the dollar tops and bottoms are in. This DXY bottom is not in yet, but I will be watching price. So if it's a, falling wedge or something along those lines, bottoms out, squeeze is very possible. Okay, so that would be a near-term buy if I like the confirmation. I just don't have it yet. If I miss the buy trade, let's say this thing just squeezes up here to 101 or 102, I'd be looking for confirmation to then sell it. I don't mind a sell trade here, stop above, and then try to get some fresh lows. So still waiting for just better entries, opportunities, confirmations on the dollar. Oil is dipping. I am going to take a dip into oil myself. If we come back down to the lows, I'm probably going to take a stab at oil. Not yet though. Gold. Very choppy, very sideways, probably driving gold traders nuts to see that no price actions happened the last 5 days. Obviously we had a big drop, but 1, 2, 3, 4, 5 days of indecision. It's like, what are gold traders going to do? There's nothing happening. I say ride this out. Little consolidation might have a little bit more downside. That's fine. I think this is a good opportunity to buy some dips on gold if we get them. Right? If we get some dips on gold, I like to buy the dips. 3,100, 3,000, great spots to buy. Anything here for like a chunk 1 and anything down here for a chunk 2, I would position gladly for, a fresh visit of those highs, maybe higher. Depends on what this risk appetite becomes. But I just say be patient. If you're long gold, fine. If I had more shares of gold, I'd be selling calls at 3,500 because I don't mind it at this point. Like I don't want it to get called away, but I also don't think it will get called away because we're going to stay probably sideways. But if I could sell covered calls in the short term and I could sell covered calls right here, I wouldn't mind like grabbing some quick income, like in the next week. Let me check GLD for a second. So highs around 317. I mean, can I sell a 320 call and actually get something for it? Let me find out. So go out to this week, 320. I get zero. It's like premium is just crap on GLD. So if I went out to next week, I mean, I get 20 cents for it. It's not awful. It's a very low delta. Question is if I did this, let me see. I've got gold for a lot of my accounts, but I don't have enough to. Yeah, I mean, I just dollar cost average into gold. So I have a rate. It's a bull put spread that's up, a couple $100. I have a bunch of shares. I mean, I'm still riding on some profits. Also, I mean, I'm happy to add more to this. So I don't know if I'm going to build up a position where I have 1, 2, 3, 4, 5, 6, 7, 700 shares of gold, but I don't mind having something, you know. So point is, if anybody has like over 100 shares of GLD, I think a good thing for some income would be sell a covered call, grab 20 to 30 cents in the next 1 or 2 weeks, lower your cost basis, and kind of rinse and repeat that in case we come back and fill some gaps. I mean, I still like owning the shares, but it'd be nice to also drop my prices by a little bit. I mean, again, getting 20 to 30 cents is not awful. Like going out a week, grabbing 20 cents, going out of the week, it's like if you can lower your cost basis over a month by $1, that's not bad, you know. And any dips and pullbacks, it's like where would I like to see it pull back to? Well, this is level one, at least a previous high, right? And then a low, and then a 200 moving average. Area 1, 2, and 3. If we get pullbacks on gold, that's where I'm looking to accumulate more. Right. So I'm not short gold. I think gold is right now going to serve as an interesting hedge against risk off trading. If the market goes risk off, gold probably soars. But the reality is, if the U.S. and China do come to terms with some type of agreeable, trade agreement is mutually beneficial, or both parties appear to be happy, then I think gold is likely going to lose some of its luster, pun intended. But it is like right now the ultimate kind of risk off flow. It's acting pretty extreme. I think we have a potential like bubble, but also the one crazy thing about bubbles is now that it's more and more popular. I don't know if you saw this last week, but Barron's had gold on the cover, that traders are going in and piling into gold. If it becomes so crowded, we're probably going to see a flush out. I mean, everyone jumps into gold. We're going to see a correction that probably scares some of the investors, and that scares the average like late traders. Like gold has been in a bull trend for the last 2+ years. You've had lots of opportunity to be long, and you're still benefiting from this nice little follow through. Everyone that's trying to buy gold now, shake them out a little bit. Shake them out a little bit, and then you see that it really was just a bunch of noise. It's just a pullback, and you can still be long gold. Okay. All right. Silver. I want to see if silver can break this resistance at 34.88. Break the high, break the high. Silver, I talked about this one yesterday. There's so much good potential on the upside, especially if silver is a catch-up trade. There's measured moves out to 41, and there's 2 highs previously in the last 45 years, 2011 and 1980. Highs at $48. So that's 79% higher than the current price. I'd love to see a little industrial metal that can move 80%. And I own the thing down here at like $20. So yeah, I'm holding out for a little bit longer on silver. I like both. I think silver is a better trade technically because I can see the levels, but gold is still a good looking play. Bitcoin, as we mentioned this week, I mean, we've got a nice little swing from this low to high, swept these highs. I'm looking for a pullback towards like 80, probably about 85,000. 85,000 is a good pullback level to add some more. If we pull back to 75, great level to add in some more. This could be a bull flag, right, where it just goes higher, and that's fine. But if we hit those highs, if you're not looking to hold Bitcoin, I would be looking to take some profit there, because I think this could range trade for some more indecision in the markets. I think we could have indecision in the U.S. markets. I think we could have indecision in Bitcoin. We could have a big range here. We could have this big accumulation zone, just like we did back last year. Once this made a run, accumulation. Made a run, could be accumulation. If you're diamond handing it, then, just add more, try to be tactical, and hopefully we're making fresh highs. What I do like about Bitcoin from the technical side is just looking at a couple fibs here. This swing here completed to the highs, right? So my next swing, so that swing hit our profit target. This swing from there, potentially a forecasted move towards about 125 or 145. I mean, obviously I'd be happy with that. If we make fresh highs in Bitcoin, target 1, target 2, from this low, I mean, Bitcoin would probably cement itself as one of the better performing assets this year. if we go from a, low to high of 66% or a move of 94%. It's not the yearly move, but I'm saying like from bottom to top, that'd be a pretty good push. So if we get all-time highs, otherwise accumulation in here. More of a range trade, but the nice thing is if as long as these levels hold, then a breakout higher. I mean, measure that move, breakout higher, right? So got some swing trades in here. Potential move around 132. I like the fibs around 125 to 145. So there's a few spots in here, in here, in here. Not a bad spot to be taking profit if you're treating it like a tactical trade. MicroStrategy, I'm up some profit on this one. This is a bull call spread. If Bitcoin makes some fresh highs, I'm going to ride this one out a little bit longer. MicroStrategy is up around $6,000. I've made $24,000 year to date, which is not too shabby. I'm seeing a lot of back and forth. I'm up about 15 grand if I get it called away at 310. I might do an income trade. June is not that far away, but I'm also thinking about this whole situation July onwards. Fed starts to cut rates. Tariff window is done in July. It's going to be a reality check. Is it better? Is it worse? So anyway, I've got a covered call here June 20th out to 310. So let me see. Collar trade, bull call spreads. So this is a collar trade here. So 310 to 200. That's a collar trade. And 310 to 200. Collar trade. This is a bull call. All right, so now these are all labeled. So all in all, in some profit, has some shares, dollar cost averaging in, little MicroStrategy. The 2 to 3 times leverage Bitcoin instrument. Ethereum, stay out of it. Copper, I'm waiting for probably a big wedge on copper. High, low, maybe this is the tuning fork type move where it just gets lower highs, higher lows. Let's see what Dr. Copper has in store for us later this year. Japanese yen, up a little bit. Nikkei, flat. FXY, EWJ, making some fresh highs. Okay, I'll keep an eye on this one. Chart alarm set at some recent highs. German index still freaking going up, man. Well, I guess if you bought the German index, the DAX, on this 200 moving average, it's great. It was basically a huge reset for the year, but man, what a dip. Same thing on FEZ, FTSE. I mean, the hard part is this was a systemic risk that was like a 2 to 3 day window, and then all of a sudden it just flipped hard. So, I mean, if you got it, you did, awesome, congratulations. If you didn't, I wouldn't chase this thing at highs right now. I think if you're lucky, this thing goes up to revisit the highs and then possibly comes back in for like just a range. It may not be this ugly high to low. It might be something in between, but this could be just a big shakeout. I mean, I don't know. The market's just crazy, man. Like, what do you do with this? This market dropped in like a week. It dropped 21%. It was like 2 or 3 weeks, and this thing dumped hard. It's like we're right back up to where we started. So it's tough to say like, oh, I could have timed that. No, you couldn't have. Like, if you were courageous enough to buy it right there, then you got that trade. If you didn't, you didn't. So I don't want to feel like you're missing out or anything. FTSE's fine. Argentina, it's like I'm just not buying these things at these reflexive highs. China, if it's a bull flag, I might still go long China. If we pull back into this trend line support, I don't mind this with defined risk to go long China. I mean, again, I think that U.S. and China have to be frenemies for the world to get along. This is looking better. Glad I got some shares of EWZ and ILF because they're both showing some signs of gaining. This is encouraging. So not bad, especially in the commodity space. If commodities are going to start gaining traction, EWZ, ILF, this is Brazil and Latin America. Really good value plays. I mean, we're pretty much at COVID lows. I was buying EWZ around this like 25, 26 handle. I'm not going to let go of the stock until probably, or this ETF rather. If we get up into like 35 or $40, I'll probably dump it. But, that's a nice little gain for, maybe 12 to 15 bucks a share. Not bad. Okay, Mags, we have Mag 7 earnings this week, Wednesday, Thursday. Hanging in there for some resiliency, maybe enough to get back into the 200 moving average, maybe able to get back to this 50% swing, maybe the 50 to 61% swing, maybe this outer trend line. So I just don't think the Mags are doom and gloom yet, But I do think the mags, if we have a push to the upside and then they're sold off again, I do think that is enough to drag the market down with it. So I do think there's really solid resistance levels around this 50 to 61% zone. If Mag 7 turns over, the market's probably dumping with it. That was the big rotation that started off this entire year. Apple at 210. Amazon is up a little bit. We have earnings this week. Broadcom is back above the 200 moving average. Google is fading from last week's earnings. Meta, I'd like to see Meta actually go lower. Meta's earnings are on Thursday, I believe. Wednesday this week. Sorry. It's Microsoft Meta on Wednesday and Apple Amazon Thursday. Microsoft is nicely off the lows. I don't have any other trades in on Microsoft as far as ratio spreads. I just have some partial shares. So I bought some shares down here and I bought some shares in here. I just did an allocation of about 1250 and 1250. So 1250 and then 370 bought some more. So it's about a $2,500 position, and I'm looking to see if we get back to highs at all this year. Maybe Q4, maybe Q1 next year. If it comes down again, I'll probably use an option trade for a little income, but I just want to go further out of the money. I don't want to flirt with this 350 low. Netflix, I think I could call a top on Netflix here, but I think they could also be, short-term suicide. So I'm not going to. I looked at the price out yesterday. I just don't get the credits that I want. But I do think Netflix is probably going to have some type of range. Maybe something like that. But otherwise, I'm just going to wait to buy dip. It's also freaking expensive. I'd love Netflix to split and I'd happily buy it. If I want to control options, don't give me $1,000 stock, right? If we did a 10-for-1 split and Netflix is $100, I gladly put on some puts. I sell puts at 90, 80, 70, whatever looks good, and see if this thing can continue to run. But I don't know if they're going to split. Nvidia hanging in there, probably pretty buoyant around the 80, $85 to $90 support. I'd like to see it get us back into the 120 handle, the 115 to 120 handle, about the 200 moving average. Tesla hanging in there at 280. I do have some trades on Tesla. I have some shares. I just closed out that one this morning. I've got another one that I'm watching with a 245. I do have some shares that are potentially getting called away this week at 257.50. That would give me about $6,900 if I get it called away this week. If it is looking good, if Tesla is up above, if we're up above $300 this week, if we're greater than $300, then I am likely going to roll another 257.50 call out a week and try to grab another $3 to $4. I have 500 shares, so if I can roll it for $3 credit, I'll make another $1,500, and that goes from about 7K to this week. If I don't do anything, it makes me about $6,500. But if I can increase that to $7,500, then I'm making 15 grand in about a month on Tesla with having just a little bit of ownership and just using some aggressive covered calls. But I'll make that determination this week. If we're dumping hard, then I want to see if it stays above 257.50. If it does not, then I will just add another covered call and try to lower my cost basis. Okay, Berkshire. If premiums were better, I wouldn't mind being toppy on this one as well. If the market turns over, Berkshire's probably going to fall back down with it. So could be, I don't know. But let me see. If I did a call condor on Berkshire, so Berkshire B, go out, let's say end of June, about 52 days out. The highs around 537. So if I were to, these are 10 wide, I don't think I'm going to get what I want out of this. So if I did a 10 wide, yeah, this is going to suck. Well, it's not terrible. We'd have to make all-time highs on Berkshire by a pretty decent amount. We'd have to make highs for a stock that is a 0.55 beta. So it's not heavily correlated to the S&P, but I don't think this becomes like a defense play. First, let's compare Berkshire Hathaway B. Price to earnings. Buffett, I think it was Munger maybe said that their price was still high. It's valued at $918. How do you put this in comparison with MasterCard, Visa, and Amex? I don't understand how that's considered peers. In my opinion, this is like trading the S&P 500. This is like the value S&P 500. I wouldn't compare this to credit cards. So anyway, income trade, is it worth it? I mean, mechanically at a 20 delta, probably not. That's a lot of risk for not a lot of reward. There is a profit trap here, so you could actually get a bonus profit. It's only out 52 days. I don't know. It's kind of silly. It's like, do I want to call the top? Not really. I'll probably hold off. I think realistically, it's probably a winning trade. Um, I'm just not going to call the top. Okay, bond wise, up in short term bonds, up in medium term bonds, up in long term bonds. That's encouraging. 10-year yield is dropping lower. All right, I'm just keeping a very close eye on the 10-year. And lo and behold, you've all been patient. So let's get into some currencies. Anything happened in the last 15, 20 minutes? Dollar on top, JPY is flattening out, Swiss is flattening out, Aussie, New Zealand bottoming out a little bit. That's good. Still pretty quiet, like, vertical axis 40 and 50, 40 and negative 50. I like a pullback here in Aussie CAD. I'm actually looking to get long. So this low to high swing, I'm looking to see if this pulls back. Take this maybe short-term fib, low to high. See if this will give us a, typically this is a good for like 382, 618 swing. See if this is a higher low and then a swing back up into resistance. Not a bad trade on old Aussie CAD. So I'm going to stay long Aussie CAD, stay long New Zealand CAD. Aussie Swiss, like I've said here the last couple of weeks, I'm actively looking for a bottoming formation. So if this is a 1, 2, 3, 4, 5, come back to this pocket, come back to this cluster, I'll turn this into a win. I may shift these down, but if it just starts to head up into this pocket, I might just take the winner and then cancel these and just look for a bigger picture move, right? Like if this is just a grind to the upside, I'll take the profit here and close it out for a win, and then settle back in for more trades, move these all lower for swings. This would be a low, high, looking for a higher low and a symmetry move to higher high. So I'm still actively watching, but if price develops where it just keeps going higher, 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 I'm not going to get greedy, like thinking this thing has to go all the way up to 6,000. I'm just going to take the profit on my break even now and call it a day, and then I'll reposition myself for a bigger picture move. But keep watching. Okay, Aussie yen. As long as we don't break these lows, I think a swing trade it offers some pretty good reward to risk. So if we have a pullback in this zone, look for a trend line break, swing trade with stop loss below, or of course an equal low is a great spot to have even less risk for high reward. But I just high time frame structure, lower time frame confirmation precision would help that. Aussie New Zealand, I'm going to add in at 106. I'm going to add in at 103. I'm going to add in at 101. I'm just going to hold this thing for a big range trade. I'm just going to dollar cost average in. Aussie dollar, stay out of it. Right now, it's like if you're long Aussie dollar, I would have been taking profit, which I did. I bought it in here, took some profit, bought it at 6,000, took some profit. If it pulls back, 6,300 is not a bad spot. Would it be possible to pull back to the double bottom lows? Maybe, but I would still be interested in look for confirmation here to go back up for a swing. This is open space, by the way, if we get there with a weaker dollar, or a pullback into the same lows and see if this level holds. That's a very low risk, high reward type setup. So I like to buy it, watch for confirmation on one of those key spots around 6,200 or 6,000 on Aussie dollar. CAD Swiss, again, watching for a bottoming formation. If this goes, well, I mean, I suppose it could just keep grinding up form some type of bullish pattern here, I'll take it to a 3-wave symmetry. If it is going to make a fresh low, I'm still looking for divergence, try to find a bottoming pattern, take it up for a 3 to 5-wave symmetry, but break even, anything above here is profit. Anything up here would be, I'd be thrilled. My initial target on this one was 7,000, and I've just made the adjustments. My break evens, lower, obviously, breaking a trend line. That might be another spot too to watch for, is just wait for this trend line to break. And if it takes time to bottom in, fine. Like this can be choppy, make some fresh lows, look for some divergence, but on the right hand side of the trend line, probably looks a little bit better for recovery. AR Capital, definitive statements are my least favorite. So, if you're certain on that, well, there you go. But there's always potentially, as Forex especially, Forex loves to test highs and lows. It can wick that low, it can test that low. It certainly can go past that low. But I would say with the dollar, if we get a pullback towards 101, 102, it's like that's probably a 2 to 300 pip pullback on the Aussie dollar. I think there's opportunities to get long. But I think for the Aussie to get stronger, the New Zealand to get stronger, we're gonna have to see China be pretty resilient. China's gonna have to get strong. Like China gets strong, you get that kind of proxy trade with Aussie New Zealand risk appetite. But yeah, I mean, I just think you had a big squeeze on the dollar. We're off to like the worst start in 30 years on the dollar. It's down, almost 10% for the year. The last time that was that bad was in the 90s. And I think this time it's, major potential consequences with just the whole conversation is the dollar losing its world reserve status? Is everyone liking gold better? Is everyone liking Bitcoin better? US bond market looks less attractive, so they say. Truth of the matter is, foreigners are buying debt. Treasuries are being bought. You can see that with price action. Like the yields are going down and the bonds are going up. I just don't know if that's a short-term rotation or not. CAD yen. If we hold these lows, again, watch for some spikes and fake outs and some noise. But if we hold these lows, a little trend line break here goes a long ways, and maybe some low risk, high reward if we have some risk appetite there. Swiss yen, no trade. Euro Aussie, possibly a pullback like I was talking about. Take this swing high, swing low, look at like a 50618 entry in here, stop loss above, and look for a swing. Good reward to risk, maybe a 1.5, 2 to 1, something along those lines for a swing trade. Gets back into these pockets, finds these inefficiencies. I think that's a good looking trade on Euro Aussie, Euro New Zealand, Pound Aussie, Pound New Zealand have a similar look. Euro CAD, I'm looking to see if this structure will break. If this structure breaks, some sell opportunities back down to range lows. Otherwise, if it comes back to the highs, not a bad spot to look at selling very high, and then same thing, just kind of taking it down for a reward to risk that's favorable. Euro Swiss, watching for a bottoming formation. If this is just going to slowly work its way up, I might take some profit here. We get back to 96.50, I might take some profit and then look at a rebuild. I'll get a swing trade in here, call this a low, call this a high, rebuild it like the 382 to 786 pullback zone, look for a 3-wave to 5-wave move. Still going to stay this thing long. Euro pound, no trade. Euro yen, no trade. Euro New Zealand, similar to Euro Aussie. If it pulls back, 50618, swing trade, look for a swing low. Euro dollar, I'd like to sell the euro dollar at the tops. If we come back up to these highs again, I'd love to sell this thing up here with a bit more confirmation. Pretty tight stop loss, try to get back down to a decent fib zone. Hopefully that is the case. We have a big inefficiency in here that I think the dollar is going to find. So, watching this structure, it could be choppy in here. Don't call the top. But if we get to the spot where it sells off, that could be a nice bear flag to trade back into some, fib levels. Pound Aussie, similar to the Euro Aussie. If it pulls back, 50618, look for confirmation, look for a swing. Pound New Zealand, very similar. Pound CAD, if we hit the highs around 87 to 8800, looking for a resistance level to sell. Pound Swiss, I'm still looking long to the 1360 zone. Pound yen, no trade. Pound New Zealand, same as Pound Aussie. High, low. If you get a pullback in here, 50618 zone, swing, look for a swing. If you get to equal lows, obviously that's not a bad trade either. Just move the stop loss. If we go lower than that, trail the stop loss. Pound dollar, waiting. We actually poked a fresh high yesterday on the pound dollar. Again, I think it's close to getting overbought. I would not be buying pound dollar right now. New Zealand CAD, I'm still looking long. Any pullback in here, pull back towards like a 50618 zone, looking for a swing. I like this low. So if this is a low to high swing, I'll measure the move, right? Low to high, higher low to higher high to higher high. Somehow getting to 87, 80, 100 would be my profit target. You look left on the chart, you can see those previous levels. That's a big, ridiculous swing, all the way up to 88, down to 76. I don't mind this trade at all. New Zealand Swiss, watching for a bottoming formation. Same thing on Aussie Swiss. If it's all this is pushing up for a wave one, pull back here, push to symmetry, taking some profit. So I'm looking to see how high I can get this thing for a safe profit. I might, cancel these trades and move these back in, but I'm just going to wait. If this goes all the way back down to the lows again, maybe adding at the bottom. But, watching to see how this thing forms, tries to find a 3 to 5 wave move up. New Zealand yen, New Zealand dollar. New Zealand dollar, a pullback is fine. Pull back into, 382,618 zone. Do we hold this low? Is this a safe stop loss? Do we get another push on the open? Like the good thing about this trade is if we get a pullback and we see some confirmation to break back bullish, this is such a good open space trade from like 5850 to like 6400. Let's just say from 5900 to 6400. I mean, that's a 500 pip space that should offer up some good trends. I don't mind that trade at all, but I think a pullback is needed because that was a straight line that probably needs to see some pullback. But once it pulls back, we see the bulls kind of accumulating here and then look to see if we're making a higher low and then start that process. I think that is a good looking trade. Dollar CAD, still the same thing. Chop suey right around that 38.50 handle. Dollar Swiss, watching closely, looking to get back to this 8,800 pocket or so, watching for bottoming formation. Dollar yen, I think a low is close. But it might poke these lows a little bit. Just don't be faked out by trying to sell this thing at the lows, right? And unless the Japanese yen is going to have a big move, it's like BOJ is not going to do anything with the rates right now. They're likely pausing this 0.5. If this is putting him in a bottom formation, any risk on trading should help this thing get back to like 148, 149. Any bottoming in the dollar should help this thing get back to 148, 149. I just don't want to be faked out at the lows. So if it goes a little bit lower, that's okay. But any confirmation to break, I wouldn't mind buying low, tighter stop losses, and I think the risk is tight compared to the reward if you're going long. I think you have a better trade there with some confirmation. All right, and that's A to Z. Cover some stocks, options, indexes, coal, gold, silver, Bitcoin, oil, dollar, currencies, bonds, yields. Earnings tomorrow. So earnings today, we have Visa, Starbucks, Snap. Let me add a highlight here. So Snap, I'm watching. Tomorrow, Caterpillar in the morning. Afternoon is a big one. So Wednesday close, Microsoft, Meta, Robinhood has earnings. Robinhood is at 48.86. We'll see what happens. But I mean, I'm sure the trading business is probably pretty good. Robinhood's got plenty of incentives. They're Robinhood Gold. They're low fees, free trading, blah blah blah. Take it or leave it. I lost a lot of faith in Robinhood with the the Melvin Capital Citadel shakeout during GameStop, and I'm not with them. I think that they did they gamified trading, didn't really democratize trading, but they did shake it up a little bit. I mean, offering zero commission trading. Now we have zero commission trading. So kudos to Robinhood for that. But as somebody that manages money, Robinhood won't get my capital. I just think that there's that potential disruption. So I like a broker that's sitting on $100 billion in cash. That's a little bit more liquid to me than they needed a bailout at like $3.5 billion. So makes me a little bit skeptical of just how look. It's good for like good trading business. I know everyone loves their app between Webull, Robinhood. That's like very user friendly, but it's a serious business, and I don't mess around with when my money is tied up or my accounts are frozen and I can't access something and you're telling me I can't sell or can't buy, then I try to find another broker. Gold. I mean, we never talk about gold in these sessions. Just kidding. I like gold. I just think it's time for a dip. So I'm looking to see if gold will pull back. I think we're going to have some consolidation here. So if gold at best is going to be high, low, lower, high, lower, low, I think we have a pullback coming. Watching for it's a 4-hour period, 200 moving average. That's not bad. A daily chart. I'm just looking for some recent highs. And we also just might range. I mean, gold has had such a huge run. It's like, what's stopping gold from just going sideways? And this gives more traders a chance to accumulate, gives moving averages a chance to catch up. Any dip can show bounces. I mean, I do think gold can stretch. We might just continue this very high bar count. I personally would love to see gold at least make a higher low to higher high. So this one, lower low, higher high. So swing, lower high to lower low. I'd love to see that spot where I can at least get something around like 3,100 or lower. I'll add some more shares of GLD and maybe look at a gold futures trade. But if it just stays sideways, I mean, just don't get overly excited. I mean, it's probably not going to be a huge drawdown if it goes sideways. It does have the potential. I think for gold to go higher again, we're going to have to see another leg of risk-off trading. If the markets are stable right now and kind of hanging out in this noisy spot, volatility remains under, like if the VIX is sub 30, which I know is ridiculous because that's typically a high VIX. If we're less than 30 on the VIX and we don't really have a big risk-off sell trade, then I think gold is going to stay sideways at best. I think a correction could happen. I'd love to see a correction, but I still love to get long again. So 3,100, 2,900, 2,800, very good levels to be strategically buying some more gold. If I don't see them, okay, fine. I'll just prepare for a bigger bubble ahead and, off we go. So, all right, I'm going to wrap it up there. I'll make sure I didn't miss anything on my calendar. I'm still good. Okay, I'll let you go for today. Thanks for being here. I'll see you tomorrow. Thanks, bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the Edge Finder 40% off, our best discount of the year. Check out the links in the description below to visit the Edge Finder homepage or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.